Hey everyone, this is DayTraderRockStar with an updated video for you going into August 10th, Wednesday, day after the Fed meeting today. And as you all know, I had computer issues, and I apologize for that. And I was what a day, what a week to have issues with your computer, and kind of really keeping me just preoccupied on this and not even really able to catch any of the move in the market. And the markets have been unbelievably volatile over the last 72, 48 hours. Just the last 2 days, it's just even after hours, we've been seeing, the market swing 60 to 70 points in the futures. And today, a swing of 600 points, and then yesterday, a drop of 600 points. It's just amazing what's happening. And one of the things I always say is, like, you have usually you usually take a position. You're whatever your what's the word I'm looking for? Your makeup is. You tend to be more of a bullish guy, optimistic guy, more of a bearish person, more of a pessimistic person, and it kind of falls over to different aspects of your life and in your trading career too. So, whenever I see the fear in the market, I look back to the other times I've always traded the fear. I've been involved in the markets for close to 20 years, so I've gone through, the major issues with the market. When we did have the flash crashes and the 9/11s and the tech bubble, and was able to experience that and seeing after that how usually the overreaction based on the news, even though it could last a while, is usually an opportunity. So when we see something drop this fast and this far, you cannot help but think it's an opportunity. But again, this is again a lot of my thoughts on this, and hopefully you could understand them. The way the market is perceived today is much different than it was 10, 15 years ago. It is a totally different market at all. It's not a as they say, the market's always fair. There's a winner and there's a loser. But there is definitely forces out there that make this market very volatile and very thing. Nothing has really changed. We know all the, we had the downgrade, but everyone expected that. And what happens is it becomes a market about predicting what the psychology of the crowd is going to do. So everyone's trying to price in stuff and try to get a level, and the markets start to trade very volatile. And there's program traders, there's black boxes, there's automated trading that's going on, high frequency trading, and it's a major part of these type of moves, because you just don't see this. You see these computers running these prices. At this point, you got to be thinking that the average investor is stepping outside. Now computers are taking over and they're swinging this market, and people are making serious money here, but it makes it very volatile. And and even though you think it is, or you might believe it is, or maybe you don't believe, it's still so volatile to instill that even as much as you've seen it in the past, see these type of drop off, you want to buy into it. And what it is it comes down to is being comfortable with that. So tonight we're going to take a look at a few stocks that I am looking at to really kind of start to look at it down at these levels. Now, I want to go over the market real fast. It's the S&P daily, and you can see the pullback and the big move back up today. This is what we call an engulfing pattern, a very bullish pattern here, pulling back halfway into that. Stochastics on the daily, positive. We finally got oversold, and we even spiked down a little bit lower. Everything played out here perfectly when it comes to stochastics, and we had that nice bounce. And if we take a look at the 60-minute chart, you could actually see that we have some momentum here now starting to build. And this is really a small bounce in the larger scheme of things. It's the first 60-minute really bounce, and that happened at the end of the day today. So remember, this is the last, I don't even know how many minutes, the last 60 minutes, the last 65 minutes, represented like 600 points in the market. So it was like, it was unbelievable, and that's where this big candlestick came within the last hour. Well, the last 2 hours, you could see it started all the way down here, 11:01, and went up to, this is again on the S&P. It's different than, you're not seeing a big move, but Jesus, a 60, 70 point move in the S&P in 2 hours is amazing. but very, very choppy and very hard to maneuver unless you're on the right side. So again, at this level, you have to be proactive. I totally believe you have to be proactive, but you have to be cautious too. So you got to have a good a watch list of stocks that you know are going to move. And what happened today is a good example of looking at those stocks that really got the big moves. Apple as being one of them. I mean, Apple basically, what a nice bounce. I don't even know what it ended up at, but not that far off the highs. And the stochastics pulled back, and it was just a beautiful move here from under in the 350s back up to the 370s. So 15 point move, 16 point move, and now everything's setting up. So what we have going for us is the stochastics are definitely setting up. And this is something that's played out over and over again. When you do get into an oversold level on the stochastics, 9 times out of 10, you do get a little bounce off of this. So we got that bounce, and we're going to see if we get that follow through, because Apple continues to look one of the strongest ones. So going forward, you know how it's going to bounce. And not to say that we're not done from falling. This market over the next few days are going to be very volatile. They're going to be very choppy. So there's no real gauge of this is a bullish move or not. There's still too much volume involved. It's just too much fear. The VIX, even though is coming down like 30% today, there's still going to be that volatility and that price action. So again, I feel more comfortable letting things come down, giving it a little couple more days, knowing that the markets are not going to go away. And my type of trading is where I do trade support levels and indicators. They don't work in this environment. You have to understand that, and I'm happy to say that. You get such big swings, and the computer's taking over, and it really becomes a shootout. So, but here's some great stocks that I'm looking at going into the end of the week, and some stocks that we always continue to look at. And again, there's no triggers on these, so to speak, but just to let you know that these are the ones that we're looking at in the room here. So 3M, again, a quality company, nice pullback off the 20-period moving average. I mean, that would have been, we always look back and say, wow, I'd rather have it at $78, $79 than $82. Yeah, me too. But that's the hardest part to do, is to buy into that weakness, and that's what you have to do. And that's the easier way to do that, is to scale back. Chop away, chip away at it. 5 shares, 10 shares, 20, whatever it is. I don't know what what everyone's trading with out there, but just to give you a perspective, to build up a position as it's dropping down here, 5, 10 shares, you're doing something for yourself. You're taking part of this. You're taking part of the process, and you're probably going to end up making money instead of being frozen in your steps. And when you get that big bounce, you're going to still say, "Well, now I missed a big move." So then it's up here, and then you're chasing it. So it's always better to buy in the weakness, even though it's the hardest thing to do. Apple, of course, AAPL, and I am holding some Apple, and I wish I was able to buy some today. Again, my computer going, and for whatever reason, that will be up and running tomorrow. So we have some also special stuff for you tomorrow to kick things off on Wednesday show. I ended up getting rid of my computer that I bought and ordered a Whiplash computer from Warbucks on our site, and that hopefully is going to be here Friday. But until then, I'll be going back to the old backup computer. So everything will be up and running tomorrow correctly. And we got a surprise for you too. So I hope you enjoy that. And I think you know what the surprise is, because I kind of played a little bit at the open today. FedEx, of course, like the FedEx trade, and again, big reversal today, up, pushing back up to $80. Again, it looks great. If I liked it at $80, then you had to like it at $76. But at $76, you're thinking the world's collapsing, and it's very hard to do that. But that's where you have to just say, you know what, this is the reason there's a way of making money, and there's a way of making a lot of money. The way of making a lot of money usually takes a lot more risk. So just that being said, to make those big moves, you really have to take the risk and buy into that. But again, I just want to keep on stressing, size matters. Size, meaning don't take that the wrong way. Meaning that it's important to bring down your size so you feel comfortable in your trade. All right, here's a couple of the stocks. I want to get through this because it's been a while. Also, because of the tech issues, I wasn't able to send out emails. So I know a lot of people were saying, "Oh, the emails are down." Well, I haven't sent down any over the last 2 days. I apologize for that. I was going to try to catch up on that, but those will be active again tomorrow too. It's been a hell of a week. Temple Inland, they do have that They do have a bid on them, or I think it was International Paper offered to buy them out for $30.60 a share. So you're getting this at a premium right now, unless they walk away from the table and stuff. So this is an opportunity just on the acquisition and how the acquisition plays out. Now, remember, if this is just the tip of the iceberg with our economy and maybe even more issues with banks, and this would play, this deal might come off the table. You never know. But that right now, that looks like a great risk-reward trade. Because you already know you got a $30 price valuation on it and they're probably going to raise their bid. Cisco, nice pullback. Nice little candlestick, oversold. Again, if you liked it at 15, you gotta love it at 14. That's basically one on my list. JP Morgan of the financials, really just broke down, but look how fast the stochastics came back. Again, the stochastics got oversold really quickly here. And not my favorite sector, the banks, but I just really caught on the check mark, the Nike check mark, the nice reversal, the nice strength off of $34. $34 seems like a nice number for JP Morgan. So I would look for this one to hold above that. Now, the next few days of the market, because we have such big ranges, we could easily pull back into the range a little, and even pull back and chop around here for a while before either moving up or breaking down. My guess is that we had some momentum. I think we could get a little bit more follow through. Stochastics are set up, so we want to see the momentum. But there's that's again a crapshoot in itself. Brazilian Foods, love the stock. Love that after the merger, it popped. It came back. It kind of closed that gap. Got taken down with the market, but not that bad, holding above the 200-period moving average. Nice little double crossover on the stochastics. This actually looks very, very good. One of the best setups on the charts right now, in my opinion, just on strength. BRFS. And if we do continue to see strength on this, I will. I tell you, I would add to this, and one of the stocks I would take a much bigger position. A semiconductor stock we used to look at. ONNN. ONNN. Again, not a bad, one of these new upcoming semiconductor companies, and had a nice run all last year, a whole year, but gave back most of it. So it starts to look really interesting around the $6-7 area. Really, really interesting. I think I might start to venture back into this one. I think this is a deal. I think it's a steal. $1 to the upside, no doubt about it. ONNN. I like it a lot. So follow up on that in the room. Yum Brands. Always got to look at Yum Brands. YUM. I'm probably not going to look at it in the thing. I don't know why I'm putting it on the list here, because I will probably not be looking at it when I start to see stocks like Brazilian Foods act so good, and maybe the possibility on semiconductor. But Boeing might be a good one. Again, Boeing also pulled back, broke down out of the head and shoulders formation. But again, oversold, bounce. 59 would have been great. 62. If it pulls back in here and consolidates, small sliver, 30%, 30% portion of your position, maybe start to take it in this area. I love it down here. Love it. JMBA. This is one that we haven't looked at, and I always watched it down here. But again, it actually got taken down with the market. It fell off. It got taken. It's flushed out, and then wow, look at that! Look at that rebound back up. It's still underneath that level. I still like the Jamba Juice. Still like it. We refuse to get in it. Refuse to buy it. But You know, it'll still be that stock that I said. I knew it was going to be bought out. Be bought out by like Coca-Cola or something. I mean, it's who knows. And here's the other one here, Sprint. When was the last time we saw Sprint here? Sprint trading down by $3. I mean, Sprint got to be worth more than that, right? Sprint really gave back everything in the last 2 years. Almost all, and it's like, look how long this thing has been putting in this, from $2.80 all the way to $5. It took like 3 years to do, and we gave that back in like 8 days. Like, thank you very much, market. So, not that I want to wait 3 years to get a good return on this stock, and that's one reason I would. But I think the pullback is a little overdone, and you know, because it's so, then we'll probably get, you know, it's something to look at if you like that. Now, Staples, this is another stock that we used to look at and trade. We actually traded this one good. I actually, you know, we actually caught this little move here. It was a little inverted head and shoulders. It was one of these moves here, probably the stochastic pullback. But again, look at the beautiful stochastic pullback. The breakdown here. If you loved it at 15, you gotta love it at 13. Staples is back on my list. Back on my list. You know, more weakness in the market. I think these are really discounted a lot. They're discounted a lot. More weakness in the market. Yeah, it could come down. So let's start off small. This one's probably definitely on my list for tomorrow. Staples definitely on my list to start a position. Probably 200 shares. On semiconductor, probably going to pick up 100 shares. We always watch Brazilian foods. I'd love to be able to buy more Apple, but I want to just hold on to the Apple I have. Because, again, here's Cree. Cree, also, I had Cree a long time on a watch list, and, you know, I said, alert me when it hits $27, and I haven't looked at that, email in a while. But it hit $27 yesterday, day before yesterday, and that's an area I've always wanted to get it at. Now, it's probably because it was a trend line or something like down here, or probably a little bit steeper. But coming down to that $27 level is something that interests me. And again, we had a beautiful bounce, a 2-point bounce, 2.5-point bounce. Stochastics look good. So Cree for the first time again looks good. We traded Cree before successfully. I think today, or you know, going into the next few days, Cree looking very good. CREE. It's been beat up a lot. So I think the analysts are probably once again clueless, and Cree will soon see its have its day again. Corning's the other one. GLW. And Corning again, the Gorilla Glass. The people, you know, it actually was holding up. I forget where we were looking at this. I got stopped out of this one. This one actually dropped out. It actually moved up off of a level we were looking at, but then it just, again, with the market, kind of gapped down, and then this is really the first bounce we're seeing. So it's $14 compared to $16. It looks okay. I'm not interested in it, though. Not interested in it. AKS Steel, though. I mean, $8. It was trading at $16 a month ago. It's cut in half. And I'm thinking, do I really want to get involved in steel stocks if there's no growth? Who's going to buy? Who's going to build anything? You know? So I don't feel good about the steel sector. But I look at the chart and I said, you know what? This one might be prime for you know, an acquisition here. This is kind of like dangling a bloody stump in the infested waters of piranha. The stock might disappear very soon at these levels. AKS, we'll be thinking about it. How do you like my bloody stump? I just wanted to throw that out for you guys so I could, you know, make you think I'm really weird. That's it. So that's the stocks. Again, probably the three stocks I'll be looking at really closely tomorrow, and probably Staples definitely looking at picking up 200 shares, maybe even 300. AKS Steel, we'll look at it. On Semiconductor, looking at buying, starting my position there. And the other stocks on the list, they're definitely worth watching. And I'm just glad to bring you this update, let you know how I'm doing. I know it's a long update, as they usually are, but I deserve to. You deserve to get an update from me because I have had so much tech issues. But tomorrow, I promise you, no tech issues, and we'll see you in the markets then. This is Day Trader Rockstar for DayTradingRadio.com.